Hey everybody, Jeremy here. I wanted to do a real quick lesson on diagonal resistance. So anytime you are doing technical analysis and identifying support and resistance zones, obviously this is something that is a bit subjective in nature. It's going to be based on your style of trading, on how aggressive of a trader you are, what you define and see as a pivot versus other traders, because some traders have rules that they want to see, let's say, at least 3 bars as a pullback to define a real pivot. Some of them just need to see a price high and then 1 day pullback and then resume. So it really depends on the type of trader. But the question that was asked of me by one of the people that I am coaching on trading was on Google. So we're on Google, and he was asking me about a potential buy opportunity on Google right now because he saw this increase in momentum, the pullback into the rising nine and the support of this 50 period moving average shown in red, and also the diagonal trend line that had previously been diagonal resistance on the daily chart here. Each time the chart came up and tested, it got slapped down. It broke through that, now pulled back and was forming support on top of it now. Oftentimes, old resistance becomes new support. So he saw that correctly and now is seeing a pivot form with upward confirmation and was asking me about a potential trade and the confirmation of this diagonal support line. So two things immediately jump out to me. First, and what I told him was, even though I love the technical conditions of this, and we do have a higher pivot low confirming on a lot of support with the diagonal resistance line and all of these moving averages underneath us, we do have earnings coming up. Earnings is coming up on February 2nd, so just shy of a week away here. And it is a fairly standard rule for short-term trading not to take short-term directional trades within 10 to 14 days before earnings, because as technical traders, it is our job to find an edge in the market, and the volatility around these major events often causes stocks to gap unexpectedly, like right here on Google's last earnings announcement. And it takes the edge away from us, because no matter how good our technical analysis setup is, it can get blown out of the water by this gap, just like what happened here. Right here, we had a really nice breakout of resistance there. We did come into the 50 period moving average. That was kind of a hesitation, but it was a really nice double bottom consolidation breaking out here. And if it hadn't been for that earnings, a lot of people might have played that, looking for a break to the upside. Right now, since we are too tight to earnings, I basically told him, if this is a long-term position and you want to hold Google long-term come hell or high water, you can feel free to go ahead. But if you're looking at this as a short-term position, or if you want to be a little bit more conservative, which usually is the best course of action, especially when someone is learning to be more conservative, I would avoid it right now and wait for a secondary pattern, wait for some consolidation here, and to hopefully get an entry price that you're happy with after that February 2nd earnings. So anyways, looking at this chart, the lesson on diagonal resistance and also support that I wanted to say was on this 6-month daily chart. So each candle is representing 1 day of price movement. He's absolutely correct that we have this diagonal resistance line that got broken, now is acting as support, and we're seeing a confirmation off of it. But really, you have to have multiple time frames in mind. And with that, as an exercise for new traders, I love to have them back out to either a 1 year chart or longer, even going out to a 3 year weekly chart, because we've had a pullback that has been long enough in duration that really 1 year is not enough to really see what I'm talking about here. So now we have 3 years. Each one of these bars is 1 week worth of price movement. And I'm just going to zoom in here so we can see the absolute highs and then the whole pullback that has resulted so far. And what I told him is, go in, and when you're drawing diagonal resistance, draw every pivot connection initially that you can see, starting with the absolute high before the pullback started. So the first one that I see is from that absolute pivot point, crossing through the first pivot high after that. So if I extend that down, we have our first one here. So we are still clearly under the ultimate, most conservative diagonal resistance line. Next, we can come in and take from the next pivot point here and come down. And depending on the trader, some of them might even go ahead and draw it as the high of this candle here, because it looks like it's a little overextended and might consolidate or pull back. So that might end up being a pivot, in which case the line would actually be slightly above the pivot here. I hope that makes sense. So if I draw this and line it up to the top of this candle, it's actually a little bit above this one here. It didn't actually line up on that. Personally, I like to do it to known pivots, not pivots that are in development. So I'm actually going to bring that down slightly right there and line it up with that pivot high. So those are the two major diagonal support and resistance lines that I see on the weekly. Then if we zoom in a bit, we could also go from this pivot high down through the pivots here. And this is the one that if we zoomed into the daily chart, he was seeing that is now acting as support, right? So if I go into a daily chart now with this in mind, you can see this is the one, and I'm going to mark it in yellow, that he was seeing that has been broken and is now acting as support. One thing that I like to do, like I said with new traders, is have them draw as many as they can see. So right now, you have the one ultimate one going from the absolute high to the next highest pivot coming out. So if we get back above this one, that is all systems go on pretty much every time frame. Every trader, even the most conservative ones, once we break that, is going to say this is probably now in an uptrend. By the time we've broken that, we're going to have set probably multiple pivot highs and lows on the daily chart. We will have set multiple pivot highs and lows on the weekly chart, and most likely will have broken out of the high from back in, what is this, end of November. So that, kind of corresponds to it as well. So on the weekly chart, we will have then reclaimed this pivot, which means we will have by definition set a new pivot high. That is the definition of an uptrend, right? Having new pivot highs, higher pivot highs, higher pivot lows, higher pivot highs, higher pivot lows. So we need that on the weekly chart to feel confident that we are back in an uptrend. We do not have that yet. Right now, we are in kind of a consolidation zone between this potential double bottom forming and this upper resistance channel. So while we did break out on this daily support line, we're battling the first real one on the weekly. We still have a ways to go before all of the more conservative traders are going to be into the trade. While I don't necessarily need to wait for that ultimate confirmation on a stock that I want to hold long term, and Google is one that I want to hold long term, I do want to see a breakout of this consolidation zone, especially since if we go back to here, from the very peak of this pullback back here, the ultimate high was 151. And then during this pullback, if we look at that a little bit more in depth and we do the same thing, drawing out our diagonals on the daily chart, we would have had this one here that we already have. But then we could have drawn one right there with this breakout of diagonal resistance. And we got a little bit of a pop, so that was great. But it wasn't a long-term break of diagonal resistance. It was a shorter-term break. The next one we could have done was to these highs here. And it came down, found support on it, bounced back up, found support over here again off of it. Another one we could have drawn would have been right here. And again, we broke out of that, but we had this consolidation zone right here to kind of worry about. So there wasn't really necessarily a trade until breaking out of that ultimate horizontal resistance zone. But by that point, we were back into another diagonal resistance zone there. So that didn't really work. And these, like I said, were shorter term breaks of diagonal resistance. We still had this major one. Let me just make that a different color so it's easier to stand out. We still had this major diagonal resistance line that had not been broken. So while you could have done quick in and out trades on any of these breaks, it wasn't the ultimate turnaround story. And also at that point, we had not dropped much from the highs on a relative basis. So from the ultimate highs here, by the time we had this breakout, we were only down about 20% off the highs. So being down 20% is great, but I get more aggressive on whether or not I am willing to buy these shorter term daily breakouts of diagonal resistance the further from the highs we have dropped. Right now, we're actually down about 35% off the highs on Google because we have fallen quite a bit more from this original breakouts over there. So the more price deterioration we get, the further deep into value we get, the more interested I get on the shorter term breaks because they're not only something I can potentially play in a short term, but I might be able to then roll them into a longer term position trade or a longer term investment trade. Right now, because of earnings, like I said, I'm still not satisfied enough to pull the trigger on this right now. On Google, again, I'm looking for it to break out of the 102.25 pivot high that we had right there. And hopefully we will get some more consolidation after this earnings report, allow this 50-period weekly moving average to come down and catch up and get a break somewhere in that neighborhood. Let's just say right out here somewhere where we break not only this horizontal support, but also this ultimate, wrong drawing tool, this ultimate diagonal. It's going to be somewhere in there, and the 50-period weekly. If we get a price movement where it consolidates sideways for a few weeks to a month or so here, and we get a breakout candle that breaks not one type of resistance, not just the diagonal, but we break through horizontal, diagonal, and moving average resistance all at once, that is the trade that we are looking for where we have a big edge on the market. Right now, yes, we might have some price movement on the short term, but we have a lot of overhead resistance we are still fighting, and I'm not convinced that it is worth the risk, especially with earnings coming up through the pipeline right here on the February 2nd. So for me personally, I am waiting. I'm willing to let this come up a bit. I'm willing to not have the ultimate low price. Hopefully we get it to come up and chop a little bit here, maybe high base, and then do the ultimate breakout when it is able to break 3 different types of resistance there instead of just one. So that is today's lesson on drawing diagonal resistance lines and a little bit about multiple resistance breaks as opposed to just one. The stronger break is going to be when you break multiple different types of resistance all at the same time and have a daily chart setting higher pivot highs, higher pivot lows with multiple time frame analysis bounced out to the weekly chart. Also at that point, setting higher highs and higher lows. And to do that, we need the price to be above 102.25 at least. And hopefully, like I said, have this moving average come down and meet us somewhere over there after the earnings announcement. So I hope that helps, guys. Enjoy your trading week, the last little bit of it that we have. And I'll be posting again this weekend with my updated market bias on the broad market indexes and sharing a little bit more about what I see in the charts and developing. So stay tuned for that and subscribe if you want to be notified when that video goes live. Talk to you soon, guys. Bye.